Technically, gold remains exceptionally strong. Higher highs, higher lows, momentum confirming price, volume supporting advances. Price is trading above the Ichimoku cloud across all major timeframes. RSI holds above 50 on pullbacks. MACD remains positively crossed. This is not speculative mania. This is a structural revaluation of monetary metals as confidence in fiat systems continues to erode. Where silver becomes especially interesting is relative performance. Silver has begun outperforming equities on a comparative basis. The silver to S&P 500 ratio has broken decisively out of a consolidation that began in 2011. For more than a decade, silver was locked in a sideways to downward compression while industrial demand steadily increased and mine supply flattened. Paper markets suppressed price through concentrated short positioning. That ratio is now reversing sharply. Silver is outperforming stocks. Yet silver remains well below its inflation-adjusted highs. The nominal peak in April 2011 was near $40 on COMEX. Adjusted for real purchasing power erosion using historical inflation frameworks discussed in works like When Money Dies or Currency Wars, that level equates to roughly $70, $80 in today's terms. Even with COMEX trading around $113, $115 as of January 2026 and Shanghai pricing higher, silver has not yet reached its true historical extreme on a real basis. That gap is both the opportunity and the pressure. So why is Shanghai raising margin requirements to 60% now? Because margin hikes are not price predictions. They are risk acknowledgments. The SGE and SHFE are responding to a situation where leveraged paper exposure risks overwhelming available physical supply. At 60% margin, leverage is effectively choked off. Speculators must either reduce positions or post significantly more capital. The intent is clear. Slow speculative demand because the physical system is under strain. When a physically settled exchange takes this step while inventories are collapsing, it tells you everything you need to know about what is happening beneath the surface. This is not an indication of fragility in the silver optimistic situation. This is verification that the tangible scarcity we've been monitoring is genuine. It's escalating, and the individuals administering the tangible movements are implementing crisis actions to obstruct a transmission emergency. Let's discuss what propels that tangible constraint. Solar installation deployments worldwide are anticipated to surpass 400 gigawatts of fresh capability yearly through 2030, according to the International Energy Agency. Each gigawatt of solar capability demands approximately 25 to 30 metric tons of silver in photovoltaic components. That exclusively is 10,000 to 12,000 metric tons per period, exceeding 320 million ounces merely from solar. Examine electric transportation, each demanding half to 1 ounce of silver in electrical elements and power storage. Worldwide EV transactions are anticipated to reach 20 million units in 2026. That's 10 to 20 million ounces precisely there. Then you possess 5G foundation, AI information facilities. Each massive scale information facility can demand thousands of ounces of silver in circuitry and temperature regulation structures, protection implementations, electronics, and conventional manufacturing applications. Meanwhile, worldwide extraction manufacturing of silver has existed basically stable to marginally diminishing since 2015. According to the USGS, fundamental silver extraction production maximized and has struggled to expand due to diminishing mineral quality, underinvestment during the extended negative marketplace, and the reality that approximately 70% of silver is a secondary product of zinc, lead, copper, and gold extraction. When those foundation commodities aren't profitable to extract, silver provision diminishes. China is the planet's most significant importer and utilizer of silver. According to information from the Silver Institute, China represents approximately 1/3 of worldwide manufacturing silver requirement. They are also deliberately arranging in commodities as element of their comprehensive de-dollarization approach. We've observed Chinese exportation limitations on essential minerals like gallium, germanium, and uncommon elements. We've observed them construct deliberate holdings in copper, aluminum, and alternative manufacturing commodities. Silver corresponds precisely into that framework. It's a double-purpose commodity, manufacturing and financial. If you're China and you're organizing for a planet where the dollar's function decreases, where provision networks divide along international boundaries, and where mechanical rivalry with the West escalates, you gather silver. The depletion in SHFE stocks is not arbitrary. It's aligned with deliberate withdrawal by organizations that comprehend the extended duration provision requirement disproportion. Presently, let's transition to the comprehensive circumstance. Gold at fresh record peaks is an indication that something is fractured in the assurance foundation of artificial monetary unit. Monetary authorities worldwide have existed systematic acquirers of gold for 15 successive periods. According to the World Gold Council, in 2024 exclusively, monetary authorities supplemented exceeding 1,000 metric tons to holdings. That velocity has not decelerated in 2025. Russia, China, India, Turkey, Poland. These are not gambling acquirers. These are national organizations distributing distant from dollar holdings. The description that gold compensates no return utilized to be the automatic rejection from traditional finance. But when genuine compensation proportions, numerical proportions, minus genuine price rises are adverse or marginally favorable. And when the danger of monetary unit devaluation is ascending due to extraordinary obligation thresholds and persistent currency manufacturing, gold's no return transforms insignificant. It's a value preservation in a planet where documentation possessions are being deteriorated. Silver pursues gold, but with a variation. Silver possesses the financial chronicle. It was currency for thousands of periods, but it also possesses the manufacturing requirement that gold absences. Gold is predominantly inactive in manufacturing implementations. Silver is utilized. It's employed in implementations where it cannot simply be replaced. Transmission capacity, reflection capacity, antimicrobial characteristics. That double requirement composition signifies silver can surpass gold in a financial emergency with a manufacturing expansion. And that's precisely the arrangement we possess. We're in an energy modification that demands enormous quantities of silver. We're in a mechanical competition, AI, quantum calculation, sophisticated semiconductors that demand silver. We're in an international circumstance where countries are accumulating deliberate resources. And we're in a financial circumstance where monetary authorities are acquiring gold and capital holders are recognizing to the reality that silver is underestimated comparative to its fundamentals. The mechanical representation on silver reinforces this proposition. The silver to S&P proportion diagram, silver valued in S&P 500 conditions, demonstrates a conclusive eruption from a 13-period foundation. That foundation was established during a duration where silver was disregarded, where manufacturing requirement was constructing silently, where documentation bearish arrangements on COMEX maintained a restriction on value. The eruption in final 2024 into initial 2026 is not an incorrect action. Capacity is verifying. The action is comprehensive across platforms. COMEX, LBMA, SHFE, SGE. We're observing reversal situations, durations where the immediate value surpasses the contract's value, which is irregular for silver and indicates tangible constraint. The COT documentation from the CFTC, which monitors arrangement on COMEX, has demonstrated a consistent decrease in the concentrated bearish arrangements maintained by a limited quantity of precious commodity banking institutions over the previous 18 periods. That dissolution of bearish arrangements eliminates a foundational obstacle that restrained silver for periods. When you associate decreased documentation provision, reduced bearish arrangements with escalated tangible requirement, and diminishing stocks, you obtain the value movement we're observing presently. But let's be proportional here. There are explanations this advance could pause or stabilize. Initially, a 60% collateral elevation on the SGE is constructed to decelerate gambling energy. It will operate in the immediate duration. Merchants who are operating amplification will be compelled to decrease arrangements. That could guide to benefit extraction and a retreat in Shanghai values, which could transfer back to COMEX through price difference. Subsequently, if worldwide expansion decelerates, recession anxieties, credit compression, manufacturing requirement for silver could diminish temporarily. Silver is more financially responsive than gold because of its manufacturing element. In a deflationary alarm, silver can be impacted more severely than gold. Third, monetary authorities do not acquire silver the method they acquire gold. Silver absences the identical threshold of organizational reinforcement. If we observe a comprehensive danger avoidance action in marketplaces, stocks descending, obligations requested, dollar power. Silver could modify alongside alternative commodities. Fourth, the U.S. Federal Reserve's strategy position matters. If the Fed transitions to a more aggressive position, if genuine compensations ascend, if the dollar reinforces considerably, that positions pressure on all commodities valued in dollars, incorporating silver. And fifth, international danger separates dual directions. If pressures diminish, commercial agreements, diplomatic advancements, the escape to security request and commodities could decrease. These are genuine dangers. This is not a unidirectional exchange. Marketplaces never are. But here's the opposition, and this is where the information from the final 24 hours matters. The collateral elevation and the stock depletion in Shanghai are not pessimistic indications for the extended duration proposition. They are verification that the tangible marketplace is under pressure. The documentation marketplace can control value in the immediate duration, but it cannot manufacture tangible commodity. The manufacturing utilizers, solar corporations, electronics manufacturers, protection contractors, they require the tangible. They will compensate ascending. The price difference between COMEX and Shanghai will expand if tangible constraint continues, and that will extract COMEX values superior over duration. Gold at fresh record peaks provides a supportive force. When gold is erupting, it confirms the proposition that we are in a financial commodities optimistic marketplace. Silver has traditionally delayed gold at the initiation of these sequences and then exceeded subsequently as the action develops and manufacturing requirement accumulates on summit of financial requirement. We observe this in the 2000 to 2011 sequence. Gold directed from 2001 to 2008. Silver initiated pursuing in 2009, and then silver transformed exponential from final 2010 to April 2011, ultimately exceeding gold on a proportion foundation. The present arrangement corresponds. Gold has existed directing since 2022. Silver is initiating to pursue presently. If Chronicle is any indication, and as Edwin Lefebvre's Reminiscences of a Stock Operator reminds us, marketplaces are propelled by individual psychology and configurations repeat. We could be accessing the stage where silver initiates to exceed. The provision requirement fundamentals have never existed this optimistic. The Silver Institute's most contemporary documentation anticipate foundational shortages persisting through the conclusion of the interval. Extraction provision is not reacting. Even with superior values, it demands periods to deliver fresh extractions operational. Current extractions are managing with diminishing mineral quality. Reprocessing can assist, but silver reprocessing is ineffective. Substantial of the silver employed in manufacturing implementations is forfeited or uneconomical to restore. The shortage is genuine. It's expanding and it's being satisfied by depletions and elevated surface stocks. The SHFE information, demonstrating 58 metric tons remaining, is a representation of the worldwide representation. We're operating down the reserve. At a certain moment, the reserve operates out, and value has to ascend adequately elevated to either distribute requirement or motivate enormous fresh provision. We're not at that value yet. Here's the intermediate content disclosure that restructures everything. The 60% collateral elevation by the SGE is not merely about managing speculation. It's about maintaining tangible stock for deliberate national concerns. Contemplate it. China is in a mechanical and international rivalry with the West. They require silver for their internal industries, solar, EVs, 5G, protection electronics, semiconductors. If gambling resources, incorporating international resources, is propelling ascending values and extracting tangible out of Chinese storage facilities, that establishes a national protection anxiety. By elevating collateral to 60%, the SGE is systematically communicating. We are preparing to make it restrictively expensive for gamblers to engage this marketplace, so that the tangible remains accessible for our internal manufacturing utilizers. This is financial combat by alternative methods. China is utilizing platform strategy to manage resource movements. And if they're executing it for silver, you superior recognize they're contemplating it for copper, uncommon elements, and every alternative essential material. This possesses consequences beyond merely the silver marketplace. It communicates you that the period of unrestricted and accessible worldwide commodity marketplaces is dividing. We're transferring into a planet where countries accumulate deliberate resources, where exportation limitations transform standard, where values in one authority can separate considerably from values in another because tangible movements are restricted. The price difference between COMEX and Shanghai could expand dramatically if China persists to restrict departures, or if they impose exportation limitations on silver. And if that transpires, Atlantic acquirers, manufacturing utilizers, commitment organizations, individual accumulators will be competing for a contracting collection of accessible commodity, and COMEX values will have to ascend to demonstrate that scarcity. Gold's eruption to 5,344 is not merely a figure, it's a psychological fracture. It indicates to the comprehensive marketplace that the 20-period stabilization in genuine conditions is concluded, and we're accessing a fresh structure for financial commodities. Silver at $131 in Shanghai, even calculating for monetary unit transformation, is exchanging at a markup to COMEX. That markup is a marketplace indication. It's communicating you where the tangible requirement is. It's communicating you that the documentation value on COMEX is delaying the tangible actuality. And as more individuals recognize to that separation, as more manufacturing acquirers recognize they require to obtain extended duration provision, as more capital holders examine the diagram and observe silver exceeding the S&P 500 for the initial duration and exceeding 10 years, the resources movements will transition. We are at a transformation moment. The collateral elevation in Shanghai might cause an immediate duration stabilization. It might disturb some fragile possessors, but the fundamental forces, the provision shortage, the manufacturing requirement expansion, the international division, the financial deterioration, the monetary authority acquisition of gold extracting silver superior, those forces are not departing. They're escalating. And the reality that the SGE experienced compelled to implement such a severe action, 60% collateral, communicates you how serious the tangible constraint is. And if the tangible marketplace is that constrained presently, what transpires when the subsequent sequence of manufacturing requirement impacts? What transpires when the subsequent international disruption propels secure sanctuary movements into commodities? What transpires when COMEX initiates observing transmission pressure because the price difference traders can't obtain tangible out of London or Shanghai? The conclusion here is not complicated. Either value has to ascend adequately elevated to distribute requirement, or provision has to escalate dramatically, or dual. Provision is not escalating in the immediate duration. It can't. The extractions don't exist. The commitment hasn't been executed. So value has to execute the occupation, and we're in the initial phases of that revaluation. Silver is still 60% beneath its price rise modified record peak. Gold merely fractured to fresh numerical peaks, but is also beneath its price rise modified maximum from 1980 if you utilize genuine price rise calculations. There is capacity to operate. And the reality that we're observing aggressive strategy reactions from platforms, that we're observing stock depletions, that we're observing markups and reversal, these are all indications that the marketplace is revaluing from the foundation ascending, from the tangible stratum to the documentation stratum, and that procedure is intensifying. Presently, what does this signify for possessors and merchants? If you're maintaining tangible silver, this is confirmation. You're maintaining the possession that manufacturing utilizers require, that gamblers are being valued out of, that platforms are struggling to administer. You don't require to execute anything except maintain and delay for value to demonstrate tangible actuality. If you're exchanging, the instability is preparing to escalate. A 60% collateral elevation in Shanghai could guide to immediate duration transaction pressure as amplification arrangements obtain terminated. That could establish a retreat on COMEX. But those retreats, if they maintain beyond essential mechanical thresholds, $31 on COMEX, reinforcement at the 50-session transferring standard, are acquisition possibilities. The trajectory is ascending. The fundamentals are optimistic. The mechanics are verifying. The international foundation is reinforcing. The comprehensive circumstance is beneficial. If you're contemplating about accessing, execute your examination. Comprehend that this is an unstable possession. Comprehend that immediate duration actions can be severe. Comprehend that this is not an obtain prosperity rapidly arrangement. This is a prolonged period foundational revaluation of an underestimated, provision-restricted, manufacturing essential, financially significant commodity. You require to be organized for instability. You require to possess assurance in the proposition. You require to possess a strategy for how substantial vulnerability establishes perception for your danger acceptance. And you require to contemplate in conditions of periods, not periods. The comprehensive instruction here is that marketplaces are dividing. The post-World War II worldwide arrangement, where commodities transferred unrestricted, where valuation was obvious and price difference maintained marketplaces productive. That planet is concluding. We're accessing a multipolar planet where countries compete for resources, where provision networks are territorialized, where values can separate because tangible movements are restricted. If you comprehend that transition, if you arrangement accordingly, if you possess the tangible possessions that are scarce and necessary, you will benefit. If you remain in documentation, possessions that assume the previous arrangement persists, you will be vulnerable. 3 conclusions from this information sequence. 1. The 60% collateral elevation by the SGE is a transparent indication that tangible silver marketplaces are under pressure and platforms are implementing crisis actions to administer that pressure. 2. Gold fracturing to fresh record peaks confirms the financial commodities optimistic marketplace and provides a supportive force for silver, which is demonstrating initial indications of exceeding comparative to stocks. 3. The depletion in SHFE stocks to merely 58 metric tons associated with intensifying extractions verifies the foundational provision shortage we've been monitoring, and that shortage is preparing to compel value superior over duration. The inquiry that remains unresolved: how elevated does value have to proceed before requirement is distributed, or fresh provision arrives operational? And how extended before COMEX confronts its personal transmission pressure if the constraint we're observing in Shanghai distributes worldwide? Execute your personal examination, confirm these information elements, comprehend the dangers. This is not guidance. This is examination of a rapidly developing situation where the tangible and documentation marketplaces are separating, and where the results over the subsequent 6 to 12 periods could restructure how we contemplate about precious commodities for the subsequent interval. Commit with reasoning, not excitement.